As of September 17, the Naira closed at 1,656 Naira and 49 kobo. And a lot of people are asking, despite the fact that the Nigerian government through the CBN has tried as much as possible to come up with different policies to shore up the value of the Naira, it keeps descending. And, you know, we have an analyst who will be helping us understand this better. Maybe there are other things that should have been looked at, maybe other areas, other measures that the federal government has not really looked into. Well, one question is, can the Fed rate cuts ease the pressure on the Naira? And we'll be looking at that this evening, and also the Naira's weakness and even the global coffee crisis set to be fueling price surge. All of these we'll be discussing on the show. And joining me for this is Frank Fagbo, who is a business analyst. Frank, it's nice to have you around.
Thank you, Liko. Thank you very much.
Okay, you're welcome. So let's just, run through it.
Okay.
First, with the Naira's sharp decline at the official market rate and, of course, the upcoming U.S. Federal Rates Reserve cuts,
Okay.
what do you think Nigerians should expect as regards the value of the Naira, despite the fact that a lot has gone into putting up measures by the CBN to shore up the value of the Naira, but that does not seem to be addressing the perennial cause?
Okay, so basically what is happening in the U.S. is that there are speculations around rate cuts, and it's either going to be 50 basis points or 25 basis points. And the sentiment in the market suggests that 67% of people are speculating that we're going to experience 50 basis points, and that's going to be massive in the market. And what we're going to see is the capital flight is going to happen from the U.S. to frontier markets. Frontier markets like that of the African markets, like that of the Nigerian markets. And when that happens, those who are positioned for it, like, I don't know if Nigeria is positioned for it, that's a big question. And I always say that we're very reactive. We're not proactive. And we need to find a way to create our own luck rather than relying on global macroeconomics to be able to determine our foreign exchange. And that is what we're doing right now. The foreign exchange, see what is happening. We've lost, the market has dropped by nothing less than 100 Naira in the last 1 month, and it's further going down. But I think it's going to be a bit stable with what we're seeing, the speculations around Powell and the U.S. Fed trying to make sure they cut rate. I think it's going to remain stable, make it a bit stable. And that's what investors want to know. That's what they're interested in knowing. It's not really your Naira to the dollar at 100 Naira, but if they can get some level, some sense of stability in any market, definitely your economy is going to be a safe haven for their investment. And that's what is most likely going to happen, stability.
But then do we still have a green light that the Feds would, of course, cut the rates? Because...
Yeah, it's going to happen today, definitely. Well, there's so many, the body language of Powell, the body language of Fed. Look at what has been happening in the U.S. We've had, to put it in perspective, since 2020, you've seen the U.S. increase the interest rate, and it's been a lot of people have been making a truckload of money from money markets in the U.S. And right now you're seeing that the body language of Powell and Fed suggests that we're gonna have a rate cut, and that's something that is certain. That's certainly going to happen, because you're seeing all the signs. 2 weeks ago, you saw what Powell said. He suggested that that's most likely what is going to happen. And they've had a good time as regards inflation. They tried to increase the interest rate just to mop up liquidity from the system and to make inflation a little bit stable. And that has been done. And we're seeing that the signs are there. Come on.
Okay, that's cool. Let us now look at the Nigerian stock market. We've seen the bullish run for a couple of days now, or should I say weeks, and some will be wondering, what are the factors, would you say, actually responsible for the rally that we've seen so far?
Okay, look at what has been happening with our money markets in Nigeria. T-bills, it's dropped a little bit, and investors are like, okay, let's leave the money markets and go into equities. And that is what is literally happening. It's called currency for a reason. It flows. It doesn't remain static. It moves from one point to another. And so it's moving, it's leaving the money market and it's tilting towards the equities market. That's what we're seeing. If we look at the number of volumes traded per day, it's increasing by the day. If you look at the number of deals per day, as I said 2 days ago, it was 8,800 thereabouts. And you're saying that Nigerians are literally capitalizing on what is happening in the equities market. So money, it's literally leaving the money market. And that is because you're seeing there are signs that our own central bank would definitely reduce the interest rate, because it's becoming so tough for a lot of businesses. Look at the macro numbers. None of them is in the favor of businesses. And it looks like that is most likely going to happen. People are we're going to have our MPC meeting soon. And when the MPC meeting comes, you're going to know what is going to happen as regards the interest rate. But I think it's literally going to drop or remain static, and before we start experiencing a little drop. And you see, from the sign of the yields on T-bills, that tells us what the decision of the MPC is going to be in the next MPC meeting, which is most likely going to tilt towards rates dropping.
All right.
It's currently 26.75, so we should see either 50 basis points or 25 basis points drop.
Okay, we just wait and see if that would actually eventually play out. Okay, so let's talk about the shortage in the global supply. I'm talking about coffee now. The supply is said to be on a downward spiral, and that's actually spiking the prices as we see it. We know the law of demand and supply. But now, how do you think businesses who actually rely on this, this is their sole business, this is what they do when consumers usually purchase this particular commodity, either for personal consumption or for other things, how would they be reeling from the impact of the soaring prices? And of course, we know the issue around the dollar rates and all whatnot. How would this affect it, including inflationary pressures?
If you look at what is happening in what's it called, Brazil is one of the largest producers of coffee, especially Arabica coffee. And we're seeing that there's a lot of droughts. You're seeing climate change literally affecting that market. And it's no longer a hoax, it's a reality. The idea of climate change growing up was that it's one definition in social studies or geography, but right now we're seeing the reality. Look at the flooding in Maiduguri, look at what is happening, the droughts in Brazil, and this is affecting the global supply chain of coffee. And if there is anything anyone wants to do who's in the business of coffee, you want to capitalize on that. Just like what happened the first quarter of this year when we experienced the boom in cocoa. Those who were in the business of farming cocoa made a truckload of money. The likes of Côte d'Ivoire, Ivory Coast, these guys made a truckload of money from farming of cocoa. And that similar thing is literally happening to coffee. And if industry players, people who have their skin in the game as regards the production of coffee, many of them should take advantage of what is happening in the global price. And it would definitely, a lot of businesses will make some money from exportation of this commodity. And we're not so much of a massive producers of coffee, and we're not so much of a massive consumers of coffee. It's in the West, and so you know what that means. That's some effects coming in, and if we can capitalize on that, that's why I always say that some businesses sometimes you need to make sure you have enough armors, you have enough weapon in your armory, so that when the opportunity comes, you're just going to pull the trigger and you hit the target. That is what we're supposed to be doing right now. Capitalize on that. And we're not known for that. We're always very reactive. When we see the market, the sentiment in the market tilting towards our favor, that's when we have a knee-jerk approach towards making sure we capitalize on that. But you have to be prepared because anything can happen in the market. Of course. News, just one single news can spike production, can spike the price of a particular commodity. And are we ready for that? Liquor.
Well, I think it's a tall shot. It's a tall shot, though, when you look at the fact that seems to be a lot of volatility in invariably all the sectors of the markets, and a lot of people will be wondering how would they be able to deal with this unpredictability when it comes to the market forces and what it brings. But then we just peg it at that and move on to the next part. Frank Fagbo, thank you so much, business analyst. It was nice talking to you on this.
Thank you, Ligon.
So let's get a glimpse of African markets, and when we return, it will be time for Market Versus. Glad to know you're still here with us. Again, it's time for Market Versus with Frank Fagbo.
Thank you very much, Lekon. Welcome to Market Versus, and we're highlighting some of the interesting data analytics from Nairametrics Research. And we're seeing that right now we need to compare some of the leading players in Nigeria's banking sector. The banking sector, most of these guys literally made a truckload of money. Look at what has been happening. And right now we're seeing a lot of them making a truckload of money from electronic business income. The e-business income for the banks includes the likes of the income from transactions carried out by customers on digital platforms such as the ATMs, the automated teller machines, mobile banking and payments, internet banking, points of sales terminals, and electronic fund transfer. Let's take a look at some of the companies. Let's dive right into the numbers. You see with Stanbic IBTC, a whopping 2.1 billion naira, and that has made them remain flat. So compared to what happened in the previous year, the first half of 2023, we're seeing that 2.1 billion naira was what Stanbic IBTC made. Let's go to the next on our list is Sterling Financial Holdings, They made whopping 4.6 billion naira. And that's 4.5% increase from 4.4 billion naira in the first half of 2023. Wema Bank, and it looks like Wema Bank has been doing some magic with their tech arm of the bank, Alert. If you know Alert, you know what we're talking about. They made a whopping 6.1 billion naira, and that's 96.8% increase from 3.1 billion naira in the first half of 2023. Let's go straight to the next. Let's shift gears to FCMB. FCMB, look at FCMB on your screen. You see FCMB making a whopping sum of 10.8 billion naira. That's 48.9% increase from 7.4 billion naira in the first half of 2023. And this really suggests how a lot of Nigerians are carrying out their transactions. It looks like Nigerians are literally interested in carrying out their transactions from the comfort of their homes, because we're seeing the data here. Numbers don't lie. Let's go to GT Co Holdings, 32.5 billion naira. I'm sure you're going to think this is going to be the highest on our list, but when we go further, you understand. This is a whopping 53.3% increase from 21.2 billion naira in the first half of 2023. FBN Holdings literally leading the pack, and we're not yet done. You're going to know who's going to be at the top. FBN Holdings, 35.1 billion naira, and that's some 3.2% increase from 34 billion naira in the first half of 2023. Zenith is literally at the zenith of this list, 41 billion naira. That is how much they've made so far. That is 85.6% increase from 22 billion naira in the first half of 2023. And this growth highlights the increasing importance of digital banking services in Nigeria, with platforms like Zenith USSD and Wema Bank's Alert becoming central to their revenue stream. As digitalization takes hold across the economy, banks are set to compete even more fiercely in the e-business space. And we're seeing that is what is really happening in the banking sector. These guys are making a truckload of money, Lakon. See the numbers. Zenith literally at the zenith of this list.
Just living by its name anyway, I must say. I
think that's why you see the government coming for them.
So that's where I'm actually going.
Windfall tax, 70%.
I mean, of course.
If you were Caesar, would you go for what belongs to you?
Oh, please. And that would actually mean, part of the information that probably fueled the Nigerian government trying to push the e-Naira transaction to be adopted now in the public space, saying that people should start, most especially public space, start using the e-Naira for transactions. So
Beautiful.
Maybe that could work. Now, well, thanks for the insight, Frank Fagbo. It was nice talking to you and having you do this. This is where we draw the curtain for today. We will continue to track the polls on Market Polls, 4 p.m. West African time, every day of the week, with Market Polls right here on News Central Television, in partnership with Naira Metrics. I am Lekon Onobanjo. Enjoy the rest of your day.